Hey everyone, welcome to the weekly review. So I prepared a few things for bonds, but this is gonna be a bit more freeform, like a live stream. I'm gonna look at stuff in real time and see how it goes. Probably gonna be a bit long, but it is what it is. Now, before I get to bonds, let's talk about tariffs a bit. And I was talking to some friends yesterday about exactly what is happening now. In that we got this news yesterday with Apple considering moving to Brazil. And my point was that it doesn't matter what the tariffs are, uh, because as long as there are safe havens, and right now a safe haven is 10%, it's a lot more likely that production will move to the safe haven because it offers better conditions and better labor markets and cheaper labor markets than moving to the US. First of all, like this whole clusterfuck that is gonna crash the market is gonna make them lose the election. Nobody's gonna move production to the US if they think in 4 years, or not even 4 years, in 2 years, because in 2 years, if they lose the midterms, Congress will override this bullshit because they'll be able to do so. And Congress actually has the power. He's gonna get overridden, so tariffs go away because Congress wants them to go away, which is as is normal. So nobody's gonna do this if in 1 year and 9 months this is gonna get reset. Secondly, there are two ways to circumvent tariffs. Actually, a single way. Let's go for the single way and then we talk about the other one. The first one is basically what Russia has been doing with oil. Basically, they export it to the country, they cook some books, then export it as if it's done in that country. That's gonna be done for sure. Like you build it in Vietnam, you ship it to Brazil and then cook some books and then you ship it to the US from Brazil, 10% tariff. It adds a bit of cost because transportation is now longer, but still a lot better than shipping from Vietnam, for example, which will have a 46% tariff. So, like Nvidia is doing with exports to China through Singapore, stuff like that. American companies are smart, quote unquote, that way, and they will figure out a way to circumvent the tariffs. As long as there are safe havens, this will happen 100%. Now, secondly, why would you ever move to the US when, if you have a safe haven like Brazil, labor cost is much lower than the US. It's an emerging market. Like even if you build a factory in Brazil, even if the US goes completely away in X years, you're still in a better place because Brazil is an emerging market, and you're gonna service the whole of South America from there. So it's still a better deal to do the factory in Brazil than to do it in US. And again, by this news, people are seeing it. It's so obvious that you cannot not see it, and they're gonna act on it. So the whole tariff thing is bullshit. It's not going to work. It's not going to do what Trump thinks. The sooner we get it at least taper down, the better. Now, that aside, let's move on to bonds. And I don't like bonds at all, or the long end of the curve. First of all, if we look at TLT, it got faded continuously. Like every time it tries to move up, we had this move here, got rejected, move up, faded. Then it continued down. Then every time it tries to go up, we get a fade. Tries to go up, we get a fade. Tries to go up, we get a fade. And this was mostly the one on Friday was mostly because of J Powell, and because he said he's concerned about inflation for good reason. But that's kind of it. I honestly don't like how the long end of the curve reacted. Like the 2 year went back to the lows of the cycle, but even that jumped because of J Powell. But this went back to the lows. This would be equivalent uh, to going here for the 20 year, which it didn't. Do I got that right? 24, yes, September. So the 2 year went to the September lows. The 20 year did not, which I do not like at all. And this is because stuff like this. Macron, this was the first one. So China is saying don't invest in US, don't do US investment from the companies. Then France followed up with this, and again, it's the obvious reason. Plus, they have the option of the nuclear financial hit, which is dumping US treasuries. And I think this is part of what the market is thinking as well. So this is one aspect. The second aspect is uh, something like this. So this was for like 1 week from like 1 week ago. All the cuts that they're doing to government is not just cuts. Like things are not as simple as that. Uh, when you cut government workers, those workers were productive, believe it or not. They did shit. So when you cut, especially when you cut stuff like IRS, there's a 500 billion drop in US tax revenue. We haven't seen this yet because April is the tax month, but I'm pretty sure we're gonna see the tax receipts that we're gonna get this month are gonna come under expectations. And again, this is very bad for the long-term yields because uh, it means deficit. They still need to spend a lot of money, and the way the budget is made, so they assume like 2.5% GDP growth every year for the next 10 years. The US budget right now. So they assume 2.5% GDP growth every year for the next 10 years, which is not fucking happening. This year for sure. Maybe next year we'll see. But this year for sure it's going to be negative. Then they assume 600 billion in revenue from tariffs, which is again is not happening because there's going to be less trade because of tariffs. So the bond market knows this, that they're going to have less revenue, and it also knows that they're going to be spending the same amount of money or more to offset this. So this means deficit increasing. For all the talk about uh, reducing the deficit and the debt problem, they're still gonna fucking increase the deficit. We might get record deficit this year. If we have a recession, I expect 10% plus deficit. This is gonna be super fucked up. And again, the long end of the curve knows this. And lastly, the cherry on top, news from last night. Basically, Benset, what's his name? Benset, whatever. The Treasury Secretary is looking for a way out because what he's where was it? He fears he's losing his reputation. Besant, okay. And again, it's true. Like this guy's uh, he's been working in finance. He's more akin to uh, Carney, the new Canada prime minister. So he's more like that than anything else. And the fact that he's dirtying himself with Trump is a very, very bad look, is losing his credibility. So again, the bond market would not like if the Treasury Secretary leaves in a second. The bond market would not like it if Trump appoints some other asshole who just kisses his ass. And it's showing, like, the fact that the 2 year went all the way to the September lows and the 20 year has only done half that is very bad. We're getting a bounce already. I am out of bonds of TLT. I don't like this at all. When I was hearing Cem saying that we're gonna get to 6% 10 year, I didn't really believe it. But now I'm right now I'm surprised we haven't gone up yet. And of course it's because of the market weakness. But like getting 10% down on stocks, not even 10%, even more. Like within 3 days, we went down from here to here, it's like 12% in 3 days. And how much did the 20 year go down? 5%. This is, in my opinion, very weak. Like we should have been at the last the 20 years back down here. So I'm not very confident in bonds. I don't think it's a short of TLT quite yet. Like potentially we could go lower depending on how stocks go lower as well. But I think Cem is right. As soon as the Fed blinks, like when someone blinks, then bonds will explode up, or yields will explode up, not bonds. So yields will explode up as soon as someone blinks. If J Powell turns dovish all of a sudden, or even talk of QE, and we're fucked from the bond perspective, and yields are gonna explode higher, probably go to 6% like Cem says. Now, talked about this. Let's go to stocks. Uh, like I said, we had a huge swing down. This is almost for sure a crash. But this is only 11%. Qs, how much did we go down in 3 days? 11%. IWM, 13% recovered a bit here for IWM. This only happens during crashes. Like there is no single other type of move that either a flash crash. This would count as a sort of flash crash, but it started from here. But look at how long it took to drop like this. This was 4%, but then it was slow and steady. We only do this kind of back to back to back to back moves during crashes, and it can get pretty ugly. But even those get like a 3 day move. Oops, a 3 day move tops out at like 15%. We are at 10. Like the most we could see is this. So I still think we can go down on Monday a bit, but I would expect it to be something like this. So we go down here, but it's a reversal candle. It will very likely be a green candle even if we go lower on Monday. Uh, this was huge as well. We had our first nine devol, and generally when it happens at the end of the move, it's not a bottom signal, but we are very close to the bottom. Unfortunately, it's very, or at least a bounce. We shall see what comes afterwards. Let's move to SPY. Go here. So this was at the beginning, continuation. Then we have this one. Oh, this was the candle I actually wanted to show. So we get a 90 devol, then we go down further, but it's a green candle. So if we go down further on Monday, I would expect it to be a green candle with a high degree of certainty and get this kind of bounce as well. Like I would expect a 5% bounce at a minimum before we do another leg down that has any kind of strength. Now for the bullish case, like I said on Blue Sky, I think we get a bounce, but the other concerning thing is that we are nowhere near OPEX. And once the cycle begins of going down, it should not stop until we get a circuit breaker. Like the amount of let's look at SPY positioning. Basically, we are here. Uh, delta is fucked completely. Like it's all put delta. We are so far down to the left that basically there are no calls. Uh, from a positioning perspective, we are at 8. We only go lower like during flash crashes like this or actual crashes. So probably if we go below 500, we will be like 2, 3. We shall see. But we very rarely go higher than this. VIX price is wrong, but positioning. VIX looks like this. We are 45-ish, something like that. So everything is calls. Uh, we're at 69, but again, only during crashes do we go higher. Maybe we do a poke above 50, and that's kind of it. Qs at 9. IWM 14. It recovered a bit above 80, but we are where we were with the lows from the 2022 bear market, around the same level. So yes, things look pretty fucked. Oh, for TLT, notice something in volume. Like we had this 97 and 112, which pretty much match the OI. So there's a high chance that these are closes. So someone took profit on this. Most likely, I will follow up on Monday and see, or on Tuesday when we get the OI update. But kind of looks like someone took the profit here because OI and volume are way too similar, um, and these were probably closes. Volume-wise, obviously 500 is a big level here. Yeah. So 90 devol, we are at likely very close to a bottom of this leg down. If we start a new leg down, then it's pretty fucked up. But I'm pretty sure we're in a crash leg and we will not be stopping here. But crash leg 2018 was also a crash leg, even though we only went down like 20 something percent, 20%. So we're still short of the 20%. 20% is 480 ish. 2%, 20%. So 20% is 485. Potentially go as low as the AV up from the low in 2022. So that's 23%. We still have how much? How much? Other 7% if we were to go all the way here. But again, I don't think we will do it in a single move. This is way, way too much. Even if we go down on Monday, I would expect a reversal to happen and to get a bit of relief. But the next leg down will get us all the way here. If we were to drop as much as the COVID lows, which I don't think will happen right now, which is 35% ish, it's 400. So this is where we will need to go to match the magnitude as the percentage of the COVID drop, which was 35%. Again, it's way, way, way too much. Positioning doesn't allow it. We are much more like 2018 than this one here. This one allowed more of a drop. This one didn't. Like we are at extreme levels and don't think we see this. Or if we do, it's gonna be more like 2008 in that uh, this is 2008. We will have a longer consolidation period. Like this is first leg down, bounce, another leg down, another longish bounce. This was from November until January, so a month and a bit, 2 months actually. And then we have another slow grinding bear market wave down, and we go to 400 over the long run. So it will have to play out if we were to get it. I don't think we will. It would have to play out something like this. Here we have a short bounce here. We go down. We have another longer bounce, and then we fade down and have another move down later. So it would be something like this, and this is not necessarily accurate as time-wise. So yeah, this is kind of how it would happen if we were to go all the way to 400. Okay, what else did I want to look at? Oil dumped as well. Basically everything dumped. Oh, except Bitcoin. Incredible, if I find it incredible how stable Bitcoin and crypto have been. I'm impressed. So yeah, now let's go to here. What we still have in the backlog is EU response. Hopefully it will not come over the weekend because it's gonna fuck us over more. And but we shall see. Uh, we could actually get some good news. Trump said like he's talking to Vietnam. Maybe we actually get some good news. But for the market to bottom in a sustained way, we need intervention. You remember it had become a meme during the Biden administration with Yellen being concerned. Whenever Yellen was concerned, the market would bottom. We need someone to fucking say they are concerned. Everything they're doing right now is antagonizing the market. Like Trump tweeting he wants a 20% market crash to creating it by himself. That's bullshit. Like the market doesn't want to see that. They want to see I am concerned. It doesn't matter that they do anything, but the market wants to see that I am concerned from someone. Nobody's showing concern. They're all like, they seem to be happy that the market is crashing. If they're happy the market is crashing, the market will continue to crash. So someone needs to show some fucking concern, and they better do it quick. If they don't show concern and we get another negative catalyst, or don't get any type of bad news, like I said, I think we go down, but we should make a green candle. Probably now the top is like 520-ish, something like this, and we will get another leg down later after that. But it's way too much too fast to stop, and we should get like a 5% plus rally very soon, followed by that move to the 20% plus threshold, which would be here for 74.80. And then maybe we get a bigger bounce this time because we went too low, maybe like 530. No, still 550 probably. We shall see. But it depends, like I said, some real life stuff has to happen. Someone needs to show concern. We need some good news. Uh, the good the goodish news is that there's a lot of pent up energy in the market. Remember the initial reaction on the liquidation day, was positive because 10% tariff was announced. Like if any type of step back from this administration, meaning lowering the tariffs, striking a deal, or something like that, will have a very bullish impact, and we will squeeze a lot. From this level of destruction, there's shorts covering, taking profit, I mean, and any type of long that comes in, it can easily give a 90 UVOL. That won't bottom us anytime soon, most likely, but we have potential for a move up short term, very in a very big size. We shall see how it plays out. But someone needs to show concern. If they don't do it, the market would not like it. So expectation is something like this, and J Powell doesn't is worried about inflation, so not doing anything. Bassett wants to get the fuck out. Trump is toying with AI videos. Who is gonna be the one that blinks? If no one blinks, we go significantly lower. Maybe we will see that 400 eventually. Again, not gonna happen overnight, but by June, this is doable if no one shows any type of regret about what's happening here or any type of support to the market. Yeah, that's kind of my logic. Don't know anything uh, else to say. Maybe DXY and US 10 yield, and this has been pretty correlated. So yields have been going down and in sync with the dollar. But what did the dollar do on Friday? It bounced. So yields will go up again soon, very likely. By the way, look at Japan 10 year, like minus 10%, 12%, 0.9. This is the type of move I expected to see in US yields as well, but it's not happening. It's barely moving. Like this is what was supposed to happen, minus 12%, and we're getting minus 1.2. What the fuck? The bond market is concerned and spiking yields. Everyone else, not so much. Yeah, that's it for now. Have a good one. Bye bye.